in Sydney with more details. Julia, a really good way to start the working week.
It was a fantastic way to start the week for the Australian share market, and such a contrast to last week where we saw the market losing almost 4%. Today the market was up a massive 3.2%, and if we look across the sectors, every single sector traded higher except for the telecom sector, and that was because Telstra went ex-dividend today. If we have a look at the market, it's quite unusual for one or two sectors to gain more than 2% in one day, but today we saw around about 7 sectors gaining more than 2%. We saw the staples sector gaining more than 2%, and gaining more than 3% was the energy sector, the material sector, the industrial sector, the discretionary sector and the financial sector. But the best performing sector today was the property sector, which was up more than 5%. There's been a little bit of speculation around Westfield. It reports its result today. I guess one of the things that traders have been doing is trying to guess which company is going to raise capital next to try and participate in the discounted capital raising. So brokers are a little bit divided on whether Westfield will be the next one, but that speculation certainly helping its stock price. If we have a look at the number of companies which actually gained ground today, well, more than half of the market actually managed to gain ground. So a great performance by the Australian market. It is following some positive data coming through from the US market on Friday, and also some positive comments from Ben Bernanke saying that the US economy is on the cusp of recovery. The market's really rebounded on the back of that, so a good start for the Australian market.
Okay, so if we turn to the charts now, Julia, where's the next challenge for the market?
If we have a look at the Australian share market and look at where the previous resistance level was, it was around about that 4,000 point mark, which the market was able to overcome. So I guess traders are now looking towards Fibonacci levels. Now, you may remember Fibonacci levels and numbers from when you were back at school, and of course it's that sequence 0, 1. So 0 plus 1 is 1, and then 1 plus 1 is 2, and 3, 5, 8, 13, and so on. And it's found in nature. If we have a look at flower petals, lilies have 3 petals. If we have a look at wild roses, 5 petals, and then if we have a look at delphiniums, you've got 7 petals there, and then if you have a look at chicory, also 13 petals, and they're found all over the place. So I guess the point is that traders also use these ratios to try and predict levels on the Australian share market. So if you have a look at Fibonacci levels, you have 23.6%, 38.2%, 50%, and so on. So if we have a look at the Australian market and overlay the Fibonacci levels, this is what it looks like. What you take is the highest point in 2007 and then the lowest point to find these Fibonacci levels, which the market seems to find quite significant. So you can see around that 4,000 point mark, which is a Fibonacci level, you saw the market bouncing off those points a number of times. The next significant level is that 4,545 point level. So that's the next level of resistance for the Australian market. So I guess traders starting to look towards that level, seeing that the market has risen so quickly. It does look like we're going to perhaps test that this week.
Julia, and shares in the ASX itself coming under pressure. Is the market concerned about that announcement from ASIC today?
Absolutely. The market has been concerned about the ASX, but this really put it in the spotlight today. If we have a look at the ASX's share price, this is in the last week, you can see it hasn't been a good performance by the ASX in the last week. Now, last week we heard that net profit was down about 14.3%, and today that announcement that there are going to be some changes in terms of the supervisory role. Now, in terms of the role, it looks like ASIC is going to look after brokers and the ASX is going to look after listed companies. But I guess why this announcement is significant is because it opens the door on competition. Now, competition won't be open until these new measures are put in place, and that's expected by the 3rd quarter of 2010. But after those measures have been put in place, the doors of competition will be open. Now, the ASX at the moment is essentially a monopoly, but there have been other bodies which have been interested in the Australian exchange, and I guess there's three main parties which have been interested in competing against the ASX. So we see CHEX, AXC, as well as the New Zealand exchange, together with 5 different brokers. So because competition would be bad news for the ASX and bad news for the ASX's profits, we've seen the ASX share price being sold down today. So going against the tide and down by 2%.